Ladies and gentlemen, welcome to Welcome. I'm your host and portfolio manager Norbert PM. In today's weekly recap and portfolio updates, we're going to talk about the state of the markets. We're also going to talk about Nvidia CEO Jensen Huang finishing selling his company's stock, then the Department Sued Visa for antitrust activities, Costco and Micron Technology's reported earnings. David Tepper said, buy everything in China, and we made some changes to our portfolio, and we're also going to assess the risk for the upcoming weeks and months. So let's just first get started with the state of the market. We saw past week we had from Germany the manufacturing PMI, which came in worse than expected. And we see in Germany that there are problems. We see Volkswagen having problems. We also hear rumors that BMW has problems. They're trying to lay off some people and also close some factories. Then on Tuesday, we had from Australia interest rate decision. They maintained the interest rate. Then in Germany, we had the business climate. Of course, it came in worse than expected. Only a nudge worse than expected, but it did came in worse than expected. Then on Wednesday, we had from Australia the CPI indicator, which came in lower than expected. On Thursday in Germany, we had the consumer confidence index, which came in worse than expected. And we also had durable goods from the US, and the Fed Chair Powell had their speech. Actually, multiple Fed members had their speech. Nothing interesting happened. The market stayed pretty much the same. Interesting was then on Friday from France, we had inflation rate report year to year. Inflation came in better than expected, so it came in lower. And of course, we also had, this was important, we had from the US the PCI indicator month to month, and it came in, well, better than expected, also just enough, so it came in, expected was 0.2%, it came in 0.1%. The market felt really okay about that, but still, after reaching all-time highs, we started selling off. We closed 2 days in a row on negative. Now, let's take a look at the week ahead. We're going to have on Monday a lot of Chinese information. So Monday is going to start off really strong with manufacturing PMI, with Caixin's manufacturing report. Then from Italy, we're going to have your fish inflation rate. For Germany, we're going to have the inflation rate. Both are expected that inflation should go back, especially that the ECB, so the European Central Bank, did have its rate cuts prior to the US. So let's see what happens there. So maybe Europe is the canary in the coal mine. And we're going to have Fed Chair Powell speech again. That guy just cannot shut up. I'm just kidding. We love when he talks. Very interesting fellow. On Tuesday, we're going to have inflation rate report from the EU. So all around is expected to calm down with 0.2%. We're going to have from the US the manufacturing PMI, the jobs report. The Tuesday is going to be insane. So watch out for next week. Then we're going to have from Japan on Wednesday manufacturing index and consumer confidence. And then on Tuesday, we're going to have from Australia balance of trade, and from the US the ISM services and PMI report. These are really important. On Friday, we're going to have non-farm payrolls and unemployment report. And from Canada, we're going to have PMI. So a really, really hard week next week. It's the start of the month next week. So what just happened the last 2 times the month started? Just hinge, not, Okay, so let's take a look at our very first major report from the last week, where we had Jensen Huang selling off a bunch of stock. Now Jensen Huang is the CEO of Nvidia. Now the news was so major, and actually it wasn't. So Jensen Huang had a portfolio where he had some shares from Nvidia, and he had a plan to sell them off from July to September, and he finished a bit earlier. Now he sold roughly, so he sold between prices of $91.72 a share and $140 a share, grossing roughly, hold my beer, $730 million in that share sell-off. Now, he still owns a majority of the shares in the company. He's also the largest shareholder with 3.8%. The stock did, as you can see in the diagram, the stock did do well right after he finished selling off, because there was some strength in the market coming back. On a side note here, on a personal note, again, this is not financial advice. You should not buy or sell stocks. On my opinion, these are just meant as opinion on the stock. So unless Nvidia has a massive pullback, I personally will not buy Nvidia. Maybe for a trade. I'll see pum, maybe I'll buy Nvidia. But unless it has a massive pullback, Nvidia is far too risky for me. Next topic would be the Justice Department sued Visa for antitrust. So the lawsuit alleged that Visa, the credit card company, has a monopoly on the debit card market and has also intimidated vendors to use Visa unless they're going to get the long end of the stick. So the lawsuit is seeking to break up Visa, although I don't know how you can break it up. I understand how they could break up Google. They could break it up into Google, the search engine, into YouTube, and a lot of small parts. But Visa it's just a credit card business. I don't know how they can break it up. So woohoo for you, because you are the best company in the credit card market, or the greatest, or the biggest. Now the lawsuit can last years and years, and who knows what is going to come out of that. Visa had a huge drop on that day. Also did drop even further on the day after that, and then it came back again just a tinge, and it still ended in the red for the week. Now on earnings, we had Costco and Micron Technologies reporting earnings. Micron Technologies came in better than expected, a huge surge in the stock. They had a surprise. I'm just going to tell you the surprise. For EPS, they had 6.7% surprise, and on revenue they had 1.35% surprise. The stock jumped, and it came back after that. So it did finish the last 2 days after the earnings calls. It did finish on negative. Food for thought for chip makers. Okay. Now on Costco, on the other hand, Costco did report earnings. They reported EPS better than expected, 4.11%, and my head just hurts from saying that they reported revenue worse than expected with a couple of hundred millions, so minus 0.27% surprise, and the stock went down like 2% or something like that, and was a huge news. That's what I call fluff in the market. That's what I call just turn out your television and concentrate on the fundamentals. Costco is a great company. I do not own Costco, but if it has a significant pullback, I might add to it. I might. Next, we have David Tepper, a multi-billionaire hedge fund manager, saying buy everything in China. Why? Well, China just had a huge surge in their stock because they stimulated the market. Hey, what will happen if you stimulate the markets? Well, first of all, stocks will grow. So the index just rose. It boom exploded from the 3,040s to the 3,560. So it has a 500 points jump in the market. This is extraordinary. It is on a massive overbought signal. Also, the major stocks in the indices, for example, Baidu jumped on that news. Actually, I can see here in the diagram that it was anticipated, and also Alibaba jumped massively. Now, both of these stocks are in a oversold. They jumped 27% in a month, 17% in a week, and 10% in a day. So all technicals indicate overbought. Food for thought there. Okay, so that's basically it for the news. Now let's jump into our portfolio. Let's see what happened in the past week. We did some changes. We bought, we sold. Now let's talk about what we bought, what we sold, and why we did it. Okay, so let's jump into the portfolio. Let's start with the portfolio performance. We had a positive 2.21% on the week. We have a current yield of 3.05% on the entire portfolio. Now, this is variable, depends on multiple factors. For example, our cash, we reduced our cash to 9.86% of the portfolio, and we received one single dividend, and that is from Brookfield Asset Management, a $0.39 per share on the Brookfield stock. I'm going to do a separate episode on Brookfield Asset Management, actually on the Brookfield Corporation and on Brookfield Asset Management. I think they are great companies, and we're going to talk about them later, in a much later video. Okay, now we did the dollar cost average, as always, into our SPY here, our index, which is just replicating the S&P 500. It's an ETF. It also has a small yield, as you can see, here 1.08 yield. But the increase was then compensated by a sell, and we're going to come to that just in a couple of seconds. Now, all of the tables and all of the graphs are in the blog post, and also for those of you who are subscribed to Substack, you're going to get them first. Okay, so I'm also on Substack, by the way. So let's go into buying. We opened new positions. We opened up a bunch of new positions. You can see our stocks are now 28. It rose from 23 to 28 stocks that we own now. First things first, on the 23rd of September, we bought Annaly Capital Management. So let's talk a bit about Annaly Capital Management. Now, they are in the financials, but they are actually in a real estate investment trust. So, meaning that the payouts that they receive, they're going to return as dividends. And they are returning, now never buy a stock based on their dividends, but they are returning 12.75%. They are going to have, on Monday, the 30th, they're going to have the X date, and you're going to receive $0.58 per share. And the price is currently at 20. Think about it, $20 per share. So massive, massive, massive. After that, I expect the stock will go back again. So why did we buy it? Well, we did buy it on 23rd of September. You can see here on a technical level, it did trigger a MACD buy signal. It was this drop, this huge red candle buy signal. Then we waited, and I think we added, we're going to come back to this a bit later on, but we did add on the 27th. Yep, on the 27th of September, basically yesterday, we added to it again, reaching a 3.4%. Where do we have Annaly Capital Management? That's not right. Reaching a 2.67% in our portfolio. Then also on the 23rd, we opened a new position, and that was FedEx. Take a look at FedEx. It is currently at a 2.22% of our portfolio. We added again on the 23rd. After triggering that sell-off, huge sell-off, we should have added on the 20th, but we waited a bit. I think I already talked about this on our last report, that I'm going to wait and see what happens. Is this going to go lower in a couple of days or not? And then this happened, and then this happened, and on Monday, we already bought FedEx. Then also on Monday, we added to Dick's Sporting Goods, a really interesting company. After we departed from our Nike shares, I think Dick's Sporting Goods is just an excellent replacement for Nike. We added to Dick's Sporting Goods, as I said, on the 23rd, which is right here. So it basically kind of triggering that. We expected to trigger the buy signal again. It did trigger a buy signal down here on the MACD, and then it went sideways again. So we added again to it on the 27th, and reaching a current portfolio position of 2.59% in the portfolio. On the 24th, we reopened our position in Microsoft. Why did we do that? Well, Microsoft does see to have here, it is a really small position, with only 0.76% of the portfolio. We're just watching Microsoft, just watching what is Microsoft doing, because it's the only one that, Microsoft and Google is the only one that didn't say anything, didn't come out with anything. I think we're looking for a big jump, especially because they invested a lot in nuclear and in Sam Altman's OpenAI. So I think, or I want to add back to Microsoft as much as possible, and as always plan to hold it a really, really long time in the portfolio. I also recommended Microsoft in my top 5 stocks to buy as a beginner investor. Definitely check out that video. Microsoft is just one giant. I can't even fathom what Microsoft will turn into in a couple of years. A couple of decades maybe. Is going to be a nuclear technology. I don't know. Now, the last thing that we added or opened a new position is the V for Vendetta. We added to Visa. Visa was hit, as we talked about it in the happenings of the last week. It was hit with a antitrust movement, and we added on the 24th here of September. We opened a position of 2.28%, and then we added on the 26th again here. We added again more to Visa. So it's a 2.28% position right now in the portfolio. Okay, now let's talk about which positions we did add a bit. We added to Novo Nordisk, the B shares, on the 24th. So right here. And it is in a MACD sell signal. Now, I don't know how long this is going to last. It does seem that here is reaching it's overreaching its RSI. Is going to go over 30. And if it does, we're going to maybe add more to this position. Novo Nordisk is a great company producing those GLP-1 drugs, which will make you lose some weight. Not fat, weight, okay? Because you're going to lose bone mass, you're going to lose muscle mass, you're going to lose fat mass, good, and from fat, we're going to have yellow fat and white fat, so you need the yellow fat. So you're going to actually, from 5 things, you will lose only one thing that you need, and everything else that you don't want to lose, you're also going to lose. So think about that. Okay, but nevertheless, great company. If there's a pill, definitely we will take it. Now, we also added to Diamondback Energy. Why? Because Diamondback Energy has a huge pullback right here. It is currently triggering a buy signal, so who knows what will happen, but it was definitely a bit oversold here. It is playing around with being oversold. We added to this position. As you know, Diamondback Energy is actually a driller. So now, like Exxon or Chevron, which is a which are refineries, this is a driller. So we added to Diamondback Energy on the 24th. See, it's here, and on the 26th, which is here, we added to Diamondback Energy. It is currently as a 3.01%. There we go. 3.01% of our portfolio. This is the only energy stock that we do own. Of course, Chevron would be a great addition to the portfolio, but it's currently, in my opinion, overpriced. So we're going to wait. Next, we always said that we did add then to Visa on the 26th, that we opened the position. We added to Annual Capital Management on the 27th after we opened that position, and to the Exporting Goods also on the 27th, so basically on Friday. Now, let's go to our sellers. We sold, from one news that I didn't even report on, we sold on nuclear. We sold a bit here on the, let's see, on the 23rd. We sold once here on the 23rd. Wait, here. From Cameco Corporation, uranium, ringing a bell. Nuclear energy, uranium, only on the simple fact that it is overbought. And we also sold on Friday when we did saw the second red candle, signaling that maybe the stock is going to come back down, as is always doing. Okay, so on the RSI and on the MACD, it didn't trigger a sell signal, but I think it's going to trigger it shortly. Maybe it's going to have another pop, then it's going to trigger it. But we are extremely bullish on nuclear, don't get me wrong, on uranium. So I said with our cost average into our S&P index, and then we sold a bit of, or reduced our position in TSMC. Why did we do that? Well, let's just look at TSMC, TSM, Taiwan Semiconductor Manufacturing. We sold it on, let's just see, on 26th. There we go, boom. Exactly where we needed to sell it. It was the weakest from the chip rally. So there's a risk to, now there are two risks. First of all, there's a risk of always China invading. The second risk is the looming Intel, whatever will happen with Intel. And the third risk, so there's a third risk, is that Nvidia is overbought and it's going to have a major correction. So who knows? We just reduce the risk a bit. Okay, we also sold up completely stocks. One of them is a mistake, and not because I sold it, but because I sold it far too late. And that is Starbucks. We sold Starbucks completely. The position was really small, so we just kept from where we hit a maximum, and now we sold the rest. I should have sold it. Should have sold it right here where I was thinking about it. There's the entire stock right after the major pop. It went up a bit, and then we sold everything on the 23rd. Here's the 23rd, 24th. On the 23rd, that's where we sold the entire stock. And we are out of Starbucks for now. Let's just see what the new CEO will do. So if you didn't watch the episode, the CEO from Chipotle moved to Starbucks, is going to reinvigorate the company. Oh, wait, what am I doing? Yes, we are on Starbucks, so don't get fooled by this right up here. We are on Starbucks, as you can see. Okay, so don't get fooled. They still have a dividend, which I believe they will cut. They have a dividend of 2.33%. 34% annual dividend, which I believe they will cut because they are running out of ideas and money. They will cut personnel. They will close a couple of stores. That's why they're going to cut. Just a hunch. Just tinfoil hat. This is my opinion. Going to reduce the dividend or get rid of it. I think they're just going to reduce it for now. They're going to close a couple of stores. He's going to look for the books. Ooh, those stores are not doing good. Why do we have a store in a store? Why do we have a Starbucks in the bathroom of the Starbucks? So close that one, and that's it. Okay, now last thing, we had a buy and sell. So this is why you're not going to say it in the buy, and also you're just going to see it in a sell, because it was actually a trade of drums, baby. Alibaba. Yes, Alibaba we bought and sold on the 26th. There we go. We did a, just check on, most of them I have on my phone. You're not seeing the actual portfolio, of course. This is the app where I push in all of my data. But on Alibaba, we bought it at, let me just check this, I'm not going to say it in euros, so we bought it at 90 and we sold it at 92.4. Okay, so 2.4 euros per share, irrelevant how many shares, but we got in and we got out, and I think we did the right thing. So if this goes up just a notch, then whoop-de-doo, but it's going to come down. It's going to come down hard. My opinion, tinfoil hat. Don't take my, this is not financial advice. Please do not buy and sell stocks on whatever I say. But if you take a look at the earnings that are expecting us, or the reports that are expecting us next week, you should be cautious, I would say. So, risk in the market. So we still have the presidential election, which is nearing and nearing. We had our federal rates cut. We have the Federal Reserve cutting rates 50 points. Bit too drastic, I would say. So the market knew, or was expecting 50. The analysts were expecting 25. And because the analyst and the market does not come together, I believe the Fed knows something that we do not know. So let's see the employment report next week, and let's see what China does next week. So the risk is high. It's not very high, but I would say the risk is high for the next week in the stock market. Ladies and gentlemen, with this being said, I'm Norbert BM. Please like this video and share it with us. It really helps us out a lot. We're a growing channel. Show me some love. Also, get subscribed to the channel and click the notification bell in order to get notified when we post new videos like this. With this being said, stay safe out there. Have a lovely weekend. Catch you next time. Bye-bye.